We'll see in the morning whether we're talking about this or the 10-year or the dollar. The other big move in the market today, of course, hitting its highest level against the yen since 90. For more on that, Kathy Lean of BK Asset Management joins us. Kathy, I wonder where you think we are in terms of chapters of stress and how much longer this can go on.
Well, I think what you have to look at is, in the near term, the U.S. Fed policy is the most aggressive. But Fed fund futures are pretty much pricing in 5% rates, which is basically what's priced into the U.S. dollar. So while I think that there could be another push higher, we got above 150 in dollar yen, that was very important for investors. I don't think that we're going to see much more momentum. I think for long-term investors, if they're looking at the U.S. dollar, now might be the time to be scaling into those dollar short trades, because while the Fed is almost certain to raise interest rates by 75 at their next meeting, confirming this move in the dollar, I don't think they have much more of a surprise for the investors to really get them back into additional long dollar trades.
Kathy, it's Tim. Thanks for joining us. But this move in the end is so extraordinary, and it's so extraordinary, and the reason part of it is the BOJ is paying no attention to inflation, or so it seems, and they seem to be so mismatched in terms of the differential here on policy. Does that concern you? Because people talk about yen, and they talk about it in terms of policy failures and systemic, and this is the stuff that, frankly, I think a lot of equity investors don't get a chance to look at every day.
You're absolutely right. I mean, Japanese have really struggled with managing the currency and managing also, where inflation is at. And they're under a lot of stress because, at the end of the day, the yen is weak, bond yields are rising, and they're really pushing against that 0.25% 10-year yield cap. So the Bank of Japan has a policy meeting next week, and they really need to take action. I don't think they're ready to, but if they really want to, put a halt to this move, I think they need to start talking about raising interest rates and catching up with the other central banks.
Kathy, currency crisis is now a term you're starting to hear more and more of. And listen, the moves in developed market currencies are unprecedented. How close are we? Are we in the midst of one now?
Well, I think, it's definitely a crisis for a lot of countries. And I think it's, we are in a very sensitive position because central banks are really pressing the gas at a time when all of these growth factors are starting to show signs of weakness. So I'm worried. I think that, we may be in a situation where growth could really break down very aggressively, very quickly across the globe, and the currency factor won't be able to, pick up the slack. And I think, overall, it could become a serious issue.
Last one, Kathy. Goldman today, we're inclined to think that the UK fire has been arrested and that the UK story will now move to the back burner. You think the pound said that today?
I completely agree. I think that the U-turn that they had in terms of ousting the prime minister and Jeremy Hunt throwing out those tax cut plans is going to lead to a U-turn in the British pound. I think that the market, the way the pound is moving now, saw this as a positive move by the UK government. It's going to restore confidence because a lot of the policies they completely caused a chaotic mess in the UK markets. So I think we're going to get to calmer times, and the pound had dropped to very, very weak levels. We're going to see bargain hunters relieved by the latest political developments.